Hey everyone, welcome back to Corporate Decoder, the place where we learn to spot the hidden gems and the potential dumpster fires in corporate filings. And today we're diving into Bright Minds Biosciences Inc.'s annual report. Get ready, because this one's got some interesting insights into how a Canadian biotech company navigates the US markets. Before we get started, if you love getting straight to the point insights from these dense corporate documents, make sure you are subscribed to the channel. We also have a growing community on Discord where we break down these filings even further. Link is in the description below. So what exactly is this document? Bright Minds Biosciences Incorporated is filing a Form 40F. This is a special form for Canadian companies that allows them to report their financial information to the US Securities and Exchange Commission, or SECI, using their home country's reporting rules. Think of it as a shortcut so they don't have to completely reformat everything for the US market. It covers their fiscal year that ended on the 30th of September 2025. Their main thing here is their common stock trading under the ticker symbol DRUG on the Nasdaq Capital Market. That ticker alone tells you they're in the drug business. No surprise there. As of the end of their reporting period, they had about 7.6 million shares out there. This number is important for understanding things like earnings per S-share and how much of the company any given shareholder owns. Now, this is interesting. Bright Minds Biosciences Incorporated is calling themselves an emerging growth company. This means they get some lighter regulatory requirements, which can be good for them in terms of saving money and time on compliance, but it also means less stringent reporting for investors. They've also opted out of an extended transition period for adopting new accounting standards, which suggests they're aiming for full compliance sooner rather than later. They're also a foreign private issuer, which, as we mentioned, is why they are using this 40F form. This means they are primarily governed by Canadian securities laws, but they are making an effort to be transparent with their US investors. The really juicy stuff for understanding the company's performance often lies within the management's discussion and analysis, or MD&A, and their overall financial statements. These documents, referenced as Exhibits 99.1, 99.2, and 99.3, are where management talks about what happened during the year and why. A key piece of information from this filing is their assessment of their internal controls. Management, including the CEO and CFO, concluded that their systems for ensuring accurate and timely disclosure of information are effective. This is a basic but important check on the reliability of the information they provide. They also discuss their internal control over financial reporting, making sure that their financial records are accurate, transactions are properly authorized, and they can prevent or quickly catch any misuse of company assets. They use the COSO framework, which is a widely recognized standard for internal controls, and concluded that their system was effective as of the 30th of September 2025. It is good to see they have these measures in place, especially for a company in a sensitive industry like pharmaceuticals. Because they are an emerging growth company, they are not required to have an external auditor's report on their internal controls. This is another way they benefit from that emerging company status. They will need to provide this later on as they grow. Let's talk about how the company is run. They have a board of directors, and importantly, all 3 members serving on their committees are considered independent according to Nasdaq rules. This is a positive sign, suggesting that key oversight functions aren't dominated by insiders. They have committees like nominating and corporate governance, compensation, corporate disclosure, and the audit committee. The audit committee, which is super important for financial oversight, is made up of the same 3 independent directors. They are all deemed financially literate, meaning they can understand the company's financial statements. This is a fundamental requirement for any audit committee. And one of these directors, Nils Bottler, is even recognized as an audit committee financial expert. By the SEC, that is a big deal, showing strong financial expertise at the top level of oversight for financial matters. Their auditors are Devisa Gray LLP. Now, regarding what they paid their auditors, that information is detailed on page 63 of the AIF, which is incorporated by reference, instead of digging through every line item here. Let's zoom into what these fees typically represent. Audit fees are for the main annual audit and quarterly reviews. Audit-related fees cover services traditionally done by auditors but outside the direct audit scope. Tax fees are for tax compliance and advice. And then there are all other fees, which in this case were 0 for both 2024 and 2025. This implies they're not outsourcing a lot of non-audit services to their auditors, which can sometimes be a concern for independence. The company is navigating a bit of a hybrid regulatory environment. They follow Canadian corporate governance rules, but also have to meet Nasdaq's requirements. They highlight a few areas where they follow their home country's practices instead of Nasdaq's. For example, while Nasdaq wants regular executive sessions with only independent directors, Canadian rules don't mandate this. However, they do explain how they ensure open discussion among independent directors. Similarly, for their compensation and nominations committees, they confirm that all members are independent, meeting NASDAQ's standards, even though Canadian rules might not be as strict. When it comes to shareholder approval for issuing new shares which can dilute existing shareholders, Bright Minds Biosciences Incorporated mostly follows British Columbia and Canadian Securities Exchange, or CSE. Rules. These rules are generally more lenient than NASDAQ's on share issuances, unless a significant portion of the company is being sold or a substantial amount of new shares are being issued. This is a common strategy for smaller growing companies to maintain flexibility in raising capital. They also mention that for equity compensation plans like stock options, they follow Canadian rules which are less stringent on requiring shareholder votes compared to NASDAQ. This is another area where they're leveraging their home country's regulatory framework. And finally, at the very end, we see the signatures. This is where the Chief Financial Officer, Ryan Chung, signs off on the report, certifying that he has reviewed it and that it meets all the requirements. This is a formal confirmation of responsibility for the accuracy of the filings. Now, let's talk about what this all means. Bright Minds Biosciences Incorporated is operating in the biotech space, which is inherently risky and capital intensive. As an emerging growth company, they're trying to balance the need for growth and fundraising with regulatory compliance. Their use of the 40 form and adherence to Canadian governance practices show a smart approach to managing us listing requirements without being overly burdened. The strength here is their clear commitment to having independent directors on their key committees, especially the audit committee, and having an audit committee financial expert. This provides a layer of confidence for investors regarding financial oversight. Their flexibility in raising capital by following more lenient Canadian rules for share issuances is a strategic advantage for a company in this sector. However, a key weakness, or rather a point of caution, is their status as an emerging growth company. While it provides regulatory relief, it also means less detailed disclosures in certain areas, like the lack of an auditor's attestation on internal controls, which will eventually be required as they grow. Investors should pay close attention to the actual financial statements and management's discussion and analysis, which are incorporated by reference into this form to get the full picture of their financial health and operational performance. Since we don't have those detailed financials directly in this view, we're looking at the framework and governance of the filing itself. Overall, Bright Minds Biosciences Incorporated appears to be a company strategically navigating its growth phase by leveraging its Canadian base while engaging with the US market. The governance structures they put in place are sound, particularly concerning independent oversight. The real test, as always, will be in the underlying financial performance and the success of their drug development pipeline, which would be detailed in the financial statements. Alright, that is our breakdown of Bright Minds Biosciences Incorporated's latest filing. What is your take on these disclosures and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives into corporate filings. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.